CCL, of course, in the coffee business, that's the key point. But let me get a sense of what kind of displacement has taken place because of Vietnam and how much of a pain point it is, if at all. The stock up about 2% as we're starting this conversation. Praveen Jaipuriar, CEO of CCL Products, with us. Sir, thank you so much for joining in. Always a pleasure to have you with us here at NDTV Profit. Let me talk about the Vietnam supply issue right now. Have you seen some stability because it was supposed to stabilize post-December? What's the latest there?
Good morning. Thank you for having me here. The outlook, the initial news is started to trickle in. The initial, crop supply has started to trickle in, and the news seems to be positive. There has been a little bit of a softening in the last week or 10 days, which is a good sign because before that there were concerns about supply owing to some flooding of some of the coffee growing regions. But that doesn't seem to have a lot of effect as of now. So the outlook is that it should soften a bit more from here and stabilize at a little 5 to 10% lower levels than what they are today. So that's at least as of now some positive news coming from the coffee supply front in Vietnam.
That's good to hear. But how much time do you think before supply chains are completely stabilized?
So we have to look at generally, over last many years we had seen stabilization during this time, but last year was an aberration because even post supplies the prices had shot up. So we would like to wait for a month. Generally, what happens is that in Vietnam they go for their annual Tet holidays, and before that the farmers are in a bit of a hurry to sell some of their stocks for the festival. So we have to see whether this softening is a short-term phenomena or a long-term phenomena. All this will pan out in the next 1.5 months. So we'll have to closely wait and watch every week from here on till February how things pan out.
Just going to ask you that. I'm glad that you've answered. Praveen, this is Alex joining in, and good morning to you as well. So expect that softening in prices to take place over the next 1.5 months and watch very closely to what happens, right? So I want to ask about the gross margins. They contracted quite considerably, and the EBITDA margins also have contracted. Is this purely a factor of input costs, or is there more at play here?
No, it's a factor of optics, Alex. Actually, we look at EBITDA margins, related to volumes. So what we say that the EBITDA margin should move in line with the volume growth. That's because we work on a cost plus model, and the price, let's say the growth that you saw, the value growth close to 40-50%. That was because we got 20% volume growth. And on top of that, 20 to 30% value growth because of the high coffee prices, right? So that optically makes the EBITDA, because you are looking at EBITDA margin in relation to the top line, right? So it looks like it has contracted, but in actuality, the way we see it, it hasn't, because the EBITDA margins grew, in fact, ahead of the volume growth, which means actually the margins improved, from our perspective. So that's a point I would like to, tell the viewers that whenever you see our performance, you should see that are the EBITDA margins growing in line with volume growth, and that is how we have been giving our guidance that we will grow volumes by 10-20% and probably EBITDA by 15-20%. So that's how you should look, at our numbers.
And I'm glad for that clarification. In fact, let me ask you about this. You've retained your volume guidance at 10 to 20%. I'm just wondering what this will be led by. Is it going to be primarily by the out-of-home consumption?
Not really, Alex, because we are into instant coffee. A large part of our consumption is in-home.
Sure.
Now, thankfully, what has happened globally is that the coffee consumption has not declined even with the price hikes. So that's good news for coffee owners and manufacturers and brand owners. Because unlike a lot of other categories where you see some decline when the prices rise, here we did not see much of a decline. Secondly, what is happening is that a lot of large economies like China, India, some of the other Asian economies are, turning into coffee markets, and these were traditionally tea markets. So that's also good news for the coffee industry because if two of the large economies are going to drive coffee consumption for the next 3-4 decades, we are sure, at least on the consumption front, that things are looking good. So that's a phenomena which is which is leading to these kind of category growths, and that is also helping us keep our momentum.
Mr. Jaipuriar, just to talk a bit about what the momentum and the strategy looks like. You have an aim to double your retail outlets from the current 1.3 lakh or so over the next 3 to 4 years. First of all, why do you want to do that? Doesn't make more sense to look at maybe the e-commerce route, etc.? What's the strategic thought there? And what is the kind of capex that you have earmarked for this?
So this is part of our B2C strategy. We launched our own brands 7-8 years ago, and we have done exceedingly well in the B2C space. And our strategy has been an omni-channel strategy and not really just an e-com or a modern retail strategy. So we are present in all forms of outlets and chains. And the reason for this is that because we are building in south of India, coffee is a mass brand people consume. So it's not just the consumers who are using e-commerce platform. It's a large part of the coffee consumption is happening through retail. And that's where we thought that we'll build our brands. And that has worked for us because, our growths have been led by a multi-channel approach. And the brand equity has been built like that. So that's the reason we are looking to double this, outlet expansion. And fundamentally, this won't require any capex because it's adding manpower, adding the distribution system, which is part of the P&L build up. Already the B2C segment is profitable, and it will feed for its own growth going forward.
When you say that you have a long-term vision to evolve into an FMCG player, just elaborate on that a little bit. Are there new product lines in place that you would want to also diversify into, or is it going to be coffee but more people drinking your coffee, and that's the aim?
So yes, we do want more and more people to drink our coffee, and we will aggressively drive, our coffee brands. But as we are building our retail distribution, as we are building our B2C segment, it also pays to kind of have a couple of more categories to our portfolio, because kind of they feed into each other. So as I said, we are looking to double our distribution. But as we go deeper and as we penetrate deeper, you need a little wider portfolio to justify the investments that you will do to deepen your distribution. And the throughput for a smaller outlet with just one category becomes that much more difficult. As a vision, we had told that we will kind of evolve into an FMCG company. We are experimenting with 2-3 more categories. And once we know that our the various aspects of sales and marketing are good to go, we will expand aggressively in these categories.
What are the categories? You've not told us that.
One of our brands, which is Malgudi, which is about South Indian filter coffee, we thought it's got a very good brand equity to extend itself into some of the other adjacencies. And one of the things that we are trying to get into is South Indian traditional snacks, because it fits well with the brand ethos of Malgudi. And we are test marketing in Hyderabad to see if the product makes, if the pricing makes, packaging and communication, everything is good to go for us to expand. So probably right now we have launched in around 100 outlets. We are taking some feedbacks, and once we are very sure of this, you will see us expanding into more areas and more outlets.
Exciting. So Malgudi is going to have snacks as well. Mr. Jaipuriar, I'm just wondering about the scale of this. And initially, is it going to be relatively small? You've already talked about pilots, but I'm wondering how quickly you can scale that up, whether sourcing is in place, whether facilities are in place, and how quickly will you be able to scale up?
So yes, sourcing is in place. We are looking at third-party manufacturers, and it's actually a tremendous shift from a company which itself was a few years ago a third-party manufacturer. We are now looking at outsourcing some of these capabilities. So sourcing is placed. We are looking at multi-points sourcing for this category. Product development is in place. So scaling up won't be a big challenge. The bigger challenge is to get the act right in terms of the mix. So that's what we are looking to sharpen. Once that is right, I don't think so scaling will be a problem for us.
Okay. All right. Mr. Jaipuriar, excellent conversation. Thanks so much for taking the time, and certainly something to look forward to. I'd be interested to talk about the implications of financials the next time, and when you have more certainty on the pilot that you're currently running. Thanks so much for taking the time.
Sure. Thank you so much.